Welcome everyone, another episode of Back and Forth with Becker and Orr. You can see Kevin there. We're both ready to go. Lots of topics today. The main one, sell in May and go away. Is that a good strategy? We'll cover that, and you can see all the other topics on the bottom of the screen. Kevin, what do you want the people to know before we get going?
Yeah, before we get going, remember, not only this video, but any of the other ones that we've done beforehand, our original series that we just finished on housing, you can find all of the information for this at our website at beckerorr.com, or subscribe to our YouTube channel, or please like us on Facebook. We're more than happy to take any of that. But now that that's out of the way, let's get to the first topic on this thing, sell in May and go away. Is this what we want to do, Clint?
Why? Is it a good idea? Is it a bad idea? I mean, why do people even mention that? We'll look at a bit of data here first, and this is from LPL Financial, and they looked at various 6-month periods. So they said, well, what about November to April? What are that 6-month period from October to March? They tested a whole bunch of them. They went all the way back to 1950, and the data shows that the strongest 6-month period is from November to April. The weakest 6-month period is from May to October. So that's what people are saying, seasonal weakness. You sell in May, you put it in cash, and you come back at the end of October, and you avoid that what can be a weak period in the market. Is that something you do, Kevin? Is that what you suggest for folks?
No, I guess I would go against that sort of a grain. I mean, there's always a few philosophies, just to buy and hold, so it doesn't matter where you want to go. And I mean, some of that works to a point. There's also, taking profits when you can. But I think if we look at the data that we've got just on that screen, it's from 1950 straight through to the current. I mean, if we go from 1950 to, even close to 2000, we always had interest rates that were decent. So, I mean, if you were only going to get 1.7% out of the market, but you could sit in cash or a money market fund earning 2 or 3, it made sense to do it. In today's environment, though, I mean, sitting on cash, you earn absolutely nothing. So why do I want to pull out if I can get, on average, at least almost 2% over that time frame as opposed to 0? So, yeah, I'm not really suggesting anybody pull out of it, but I can see where this whole concept has originated over the last 70 years. What do you think? Is there anything new?
Yeah, that's a very good point, the cash rate. Yeah, if you can get 4 or 5% on a GIC or cash, well, hey, that's a different option, but you get nothing. It changes the whole equation. And we'll quickly look a little more recent data. This is looking from, again, LPL Financial, but looking from that May to October. So just that 6-month period, saying, all right, in the last decade, what was the return from the S&P 500 during that 6 months? And it has been phenomenal. Some really big numbers there. Now, last year, a bit of an anomaly, you had the pandemic, but during that 6-month period, you had 12% growth. You certainly wouldn't want to miss that. And then you can look back at some of the prior numbers there, Kevin, and there's some double-digit returns in the last 10 years during that 6-month window.
Yeah, I mean, even where it's looking at it from where it is, I mean, you got an 8% in there, you've got a 7.1. I mean, these are numbers that you hope to get for the course of the year if it's a balanced portfolio, let alone in that short 6-month time frame. And yeah, I mean, every now and then you're going to have a negative year, but I'm sure if we did all the rest of them, we'd be in the same boat. There'd be a negative year in there somewhere in the April to November sort of scenario, or should I say November to April, as it were. So yeah, on average nowadays, I think with low cash rates and everything else, maintaining through this time frame, probably not a bad idea.
Yeah, I mean, the data recently is certainly in favor of keeping it. You factor in low interest rates, doesn't make a whole lot of sense. Moving on to your favorite topic here, Kevin. The Jets have been doing phenomenal. I'm sure you want to talk about these.
Let's move on. We don't want to talk about this at all. After watching last night's game, I'm done. I don't want to talk about hockey. Yes, I am a diehard fan, and I am very upset over the last 1-9 record over the last 10 games. I will admit that last night they looked much better. They played a much better game, but the big problem has been the offense is basically dried up. They are not getting goals from the men they need to. Their top 2 lines are having trouble scoring. Defensively, they've been more of a normal play over the last little while, and goaltending-wise, it's been the same thing. It's not been weak, but by the same token, it's been average, and we need above average. So going in there, I would say they're limping into the playoffs as opposed to a real strong push. What do you think is going to happen once we get here?
Yeah, they're going to have their work cut out for them here. I mean, they're going to be facing off against Edmonton or Toronto. Both are fairly strong teams. Edmonton's not quite as deep as Toronto, but the Jets are going to have to bring their A game just to have a shot against either team. If they want to get past the first round of the playoffs, they have to do a lot better than they've done in the last 10 games. And hopefully that's the case. Hopefully they'll be able to step it up as we get to the end of the season here. But right now it looks a little grim. Like, this is a little disheartening as a fan going into the playoffs.
Yeah, it's definitely not something you want to see. But then again, there's always that theory that, well, we're at that point. We know we're in the playoffs. Let's just get rid of the last 3 games and let's get to it and see if we can start the new season. So anything can change. And, fingers are crossed, I'm hoping. But At this point in time, I'm not holding my breath, to say the least. Well, other than the Jets, let's talk about more bad news and the way things are going. What do we mean by bad news is good news? Give us a hint.
Yeah, we've talked about this. Well, not recently, but it certainly was a phenomenon coming out of the '08 recession. You had that time period there. There's lots of stimulus, and every time there's bad news, people are like, oh, the stimulus is going to stick around for longer now. They can't pull it out just yet. So you'd get a bad news event, and you'd see the markets actually go up, with the idea that bad news meant stimulus for longer. That actually happened on Friday. You had some job numbers come out for Canada, job numbers come out for the U.S. They were ugly job numbers. In the U.S., folks were expecting 1 million new jobs being created. They came in at about 265,000, well below the target. Same thing in Canada, well below the target. And yet the markets went up to record highs.
Yeah. Theoretically, I would assume the same thing. That's bad news. What you want is to make sure that that market is growing, that people are being employed, that we're opening up. That would definitely signal bad news to me. And you're right. I mean, markets just seem to absorb every piece of bad news is going forward as positive right now, probably because of the monetary stimulus, because of the fiscal stimulus, and we're going to continue to pay everybody going forward. Now, I'm assuming eventually that bad news will be bad news, but it sort of reminds me of any of the things that have been happening with some of these stocks recently, where you hit a record earnings number and all of a sudden the stock sells off on the same day. It's a complete opposite of what we're expecting, and it's the buy on rumor, sell on fact scenario. So, do we see this continuing for a while yet?
I think you'll see moments of this going forward. Going back to that '08 time period, coming out of that recession, it was the same type of idea. You got through '09, a phenomenal bounce off the bottom, really strong numbers into 2010, 2011. Every time there's a bit of bad news, or anytime there's a good news item, people be talking about, well, is the central bank going to tone down some of that monetary stimulus? When are they going to tone down the stimulus? But whenever there's bad news, that question stopped. People like, oh, the stimulus is going to be here for longer. Fantastic. And the idea of longer stimulus kind of propped up the market. So you get that weird kind of conundrum, that little bit of a balance. And I think that's what we're going to be in going forward. So if you're watching the news hoping to get a decent read on what's going to happen in the market, that's probably not going to happen. That's hard on most days. It's going to be even harder going forward because you have this weird dynamic with the stimulus right now.
Yeah, so don't trust whatever the news is saying. That's basically where we're at. That being said, travel is another thing that a lot of people want to do. And I think that after a year being away, that it's starting to build up. With Canada, we're seeing more and more lockdowns going on right now, and this is cross country. We're seeing that third wave hit. Who knows the next time we're ever going to be able to travel outside the province, let alone outside the country. But Australia and New Zealand, they're having different aspects to this, aren't they? What's going on there?
Yeah, they're having a travel bubble. They've had it for a while. So you can go from New Zealand, you can go to Australia, and then there was a little bit of an outbreak in Australia. However, so they stopped the bubble during that outbreak. However, the outbreak's been contained. So now they're back to free travel within those two countries, which is a completely different scenario than what we see here. But the question, I think, is do you believe that could happen between Canada and the U.S.? I know we're at different spots right now, Canada and the U.S., with how we're dealing with the virus. But do you think that could be possible? We could have a travel bubble within Canada and the U.S.?
Yeah, I believe that that's definitely a possibility that could come. I think that it will depend on how vaccinations go. And I mean, let's remember, Canada and the U.S. are two of the countries that have had the most, shall we say, COVID identifications that there's been. We've had more people catch it than they have in the other two. Combined, Australia and New Zealand's maybe 35,000 people globally that they've had. Whereas, we've had over 1 million people here alone. So I do believe that will be something that we look at, as opposed to having everybody come internationally. Once that border opens again, easily a travel bubble that can go back and forth because we know where everybody's been. But you're right. I think that may be a ways down the road yet. And right now, if we look a year ago, it was the Canadians that were saying, no, we don't want the Americans to come in. I believe now we're getting it the other way. It's the Americans saying, well, no, we're vaccinated. We don't want the Canadians coming in yet. So I believe that is a possibility. Do you think that this will happen, within a year, or are we looking at more of a global aspect?
It's probably going to be longer. That border is going to be tough to get back open. I think on our side, Canada, our vaccine rollout has got to get much better before that question is even really posed, because we're just not in the same spot right now. We're in lockdowns across the country, more or less. And in the U.S., they're talking about the exact opposite. They're talking about opening up their economy because vaccinations are so much further ahead than they are in Canada. So until we're in a similar spot, I can't really see that discussion moving forward. But we'll see. We'll see what happens in the months and weeks ahead here. I'm optimistic, Kevin. Fingers crossed.
Yeah, well, maybe our bubble's going to be Manitoba, Saskatchewan, and that's it. Regina, here we come.
There we go. Well, moving on to the question of the week. We always like to incorporate a question. This one I've been asked a couple of times. It has to do with copper. How high can copper prices rise? Copper is typically, Kevin, they call it Dr. Copper because it kind of leads the economy. Normally, as you come out of recession, you see an economic boom, copper prices go quite high. But I'll pull up a chart here and you can see it's not only going up this time, but we're hitting some record levels. What are your thoughts here with copper?
Yeah, I mean, copper is becoming more, I mean, it's a main ingredient in a lot of things. If you're doing home building, there's copper pipes to put in there. And as we're seeing in Canada, we're getting record home builds. We're getting more and more people buying. So more houses, more copper needed. That's one of the areas. I mean, it is utilized in so many different areas going forward. But I think the biggest one that we want to touch on is the electric vehicle. And I mean, with electric vehicles becoming more and more popular, and yeah, we still got the combustion engine here yet, but with electric vehicles becoming more and more acceptable, you're going to find more and more need for copper going forward. Now, am I wrong on this point, or what are we talking about?
No, that's bang on. That's bang on. This is from a Barron's piece that came out recently. It was written by Andrew Barry, and I got a quote here. In that article, he says, an electric vehicle contains as much as 180 pounds of the red metal. That's 4 times the amount in an internal combustion engine vehicle. So if you're thinking that green wave is coming, if you think that big infrastructure package in the U.S., which has a lot of green initiatives in it, is going to get passed, well, that's going to be good news for the green economy. That's also going to further boost your copper prices because there's lots of copper in all those different EV vehicles. So there's a couple of items here that are pushing up copper demand. The reopening of the economy, and then you layer in some of that green economy push, and I think you're going to see record high copper prices. I don't think we're done yet. I think there's another leg higher here for copper.
Yeah, and as it continues to go forward, if we're more and more green going forward, I mean, you could easily see $5-6 per pound, which, you know, is another 25 to 30% higher than where they are right now. So on the long-term play, this looks like a fairly good option to deal with. Now, it won't be, you know, straight up. It'll probably have a lot of volatility, but things as they are look pretty good. So yeah, other than that, I think the copper topics have been done. We covered a few odds and ends here. I'm not going to talk about the Jets anymore until they win again, which who knows when that's going to be. But I think that's all that I have to say for it, Clint. Why don't you let us know what the last word is?
There we go. Well, you can see at the bottom of the screen, chatwithclintonandkevin.com. Maybe there's a topic you want us to tackle. You simply have a different question. Let us know. That's part of our website. You can go there. You can fill in the form. We'd certainly love to hear from you. We'll be back again next week. We're actually going to be starting another series. We had good feedback on our housing series. So we're going to be doing a whole series on cryptocurrency. So keep an eye out for that. We'll be back again very soon.